Welcome to No Fluff, Just Ideas. This is your host, Sophocles, and we're going to be discussing investment ideas from around the world. So buckle up and enjoy. This podcast is for educational purposes only. Full disclaimer at the end of the podcast. Today, I'd like to welcome Oleg. Oleg has many years of experience in special and distressed situations in the emerging markets. He was at my conference last month here in Cyprus, and he presented something which I thought was a really interesting idea. So I've asked him to join us for a recording to discuss this. If you're listening and you would like to join our next in-person event, it will be in Vietnam in March 26th. But if you don't want to present an idea, because everyone in Vietnam will have to present an idea, it's an idea exchange, then you can check out our online event in December, which is just 12 fund managers pitching ideas. Oleg, welcome to the show.
Thank you, Sophocles, for invitation. Really glad to join the podcast. So the idea I'm going to be talking about today is called the bond called Abra Global Finance Group. It is a 14% coupon bond, 2029 maturities, roughly 4 years, trading right now at around price of 97, which gives around 15-16% yield to maturity. The bond is collateralized by stake in airline in Avianca and by certain interests in another airline, Brazilian Gol. So let me start maybe a little bit of background on how Abra has been formed and how we came to this situation with this bond right now. During COVID times, obviously a lot of airlines experienced huge difficulties in servicing debt, in just continuing operating, in paying leases. A lot of them, in particular in LATAM, have went into bankruptcy to restructure their operations. And Avianca in Colombia was one of them. LATAM Airline Group, Aeromexico in Mexico did it. And Avianca, it used to be and still continues to be the largest and the dominant airline in Colombia, which is around 40% market share in Colombia. Then in addition to that, there was a company called Gol, which is one of three major airlines in Brazil. Gol idea was to try to avoid bankruptcy and not to have this period of 1 or 2 years where you are just under stress and some passengers don't want to fly your airline, maybe because of bankruptcy, stuff like that. So they decided to do something out of the court. At the same time, the debt of Gol was trading at very distressed prices at the time, 50-60 cents on the dollar. So clearly market did not believe this would go for long enough time for Gol to be outside of bankruptcy. So that something needed to be done about this airline, which is also a big airline in Brazil with around 25-30% market share. So what they devised to do, I mean, the stakeholders of Avianca on one side and Gol, was to try to merge the interests together and do a structure where these two airlines continue to operate as separate airlines, but they merge financially. So what happened is Gol made a tender for its bonds at around 50, 60, 70 cents, depending on maturity. So it took off all the major part of the debt problem in Gol, and this debt has been paid by the newly issued bonds of Abra, which was formed, and the assets of Abra were shares in Avianca and shares in Gol, as well as in exchange for the fact that they paid the standard price of 50-60 cents on Gol debt, Abra also received own senior secured loan into Gol. So assets of Abra initially consisted of 100% shares in Avianca, which didn't have a lot of debt, 100% shares of Gol, and also the senior secured receivable from Gol Airline, right? And in order to fund that, in 2023, basically Abra issued the initial bonds in the market with 2028 maturity. two series of bonds, one convertible, another was a straight bond. So that's how this whole Abra was set up.
Did the government of Brazil or Colombia provide any help during COVID to the airlines?
No, not really. They needed to go by their own, and but what in the hindsight, what Avianca did and what other airlines that went to Brexit did was good that they actually went and filed for bankruptcy because they managed to renegotiate a lot of leases. They rejected unnecessary routes, aircraft. So this was a full solution where Avianca came out, for example, much stronger because of bankruptcy. Whilst looking back, I think Gol should have probably done the same, really. Gol also managed to renegotiate some leases during COVID, but you can always do much more and much quicker during bankruptcy process, right? Because that's you have the legal right to totally change your capital structure, right? Avianca did everything by themselves, but they actually benefited quite a lot from this very efficient bankruptcy process. They went into single aircraft, basically aircraft 320 for short term and Dreamliner 787 for the longer haul. So they really streamlined the fleet. They did all what needed to be done by themselves during bankruptcy. Whilst for Gol, it was Abra was kind of effectively Abra was done in order to try to do the same with Gol, but outside of bankruptcy, right? And also merge together these interests of two airlines so that they could do some code sharing, they could do some whatever, all the organizational
Mhm.
synergies and stuff like that, right? That's a bit of background of how Abra was formed and why it was formed. It was clearly post-COVID. There was this idea that there needed to be a bigger consolidation in airline space.
I mean,
Uh,
is it so? Was there first the restructuring of Avianca and then Avianca approaching goal, or I mean, is there some major architect management guy behind this who thought of this, or I mean, were were they? Do you know if they were, I don't know, friends before COVID and somehow they decided to join forces, or I mean, I'm just trying to understand why did Goal go to Avianca or Avianca go to Goal, and it wasn't Goal and some other Brazilian airline.
that's a good question. I cannot say I know that the answer for sure, but I suspect that Elliot, for example, was big stakeholder in Avianca. They bought some bonds during bankruptcy, and they ultimately, I think, emerged as a shareholder of Avianca. And Elliot, as we both know, is an extremely sophisticated investor. And
Mm.
I think that this may have come from them. I don't know, but sounds like it's some interesting complex structure that helps to leverage two airlines together and move forward. The other the other shareholders of Abra Group was a Brazilian fund that used to own Gol, then some other couple of hedge funds in US that used to own Avianca. But I suppose the structure comes from Avianca side. That's my guess. I don't know for sure because this is type of deals that uh, hedge funds likes to do and structure to make
Yeah, yeah, yeah.
to make use of finance the most efficient way. If you see what I'm saying, right? I guess that's the idea behind it.
Yeah, I wouldn't be surprised. I mean, Elliot's done a lot of stuff in Latin America. I wouldn't be surprised if that was it. But Abra was set up. I think it's a UK entity, isn't that right?
Yeah, in 2023,
So they set up.
beginning of 2023.
Yeah, so they set up Abra. Abra put under its umbrella Avianca and Gold. But I think post restructuring, doesn't Abra have an 80% of Gold? I thought it was 80. Post restructuring, it was
No,
80%.
that's we're talking about situation right now. That's because if we move so 2023, this was done. The idea was that Goal would never have to file for bankruptcy. This is how it's gonna go, right?
Okay.
And this whole Abra, interestingly, I think at that time Abra was thought about as a way to play Goal. right? Because it had this huge claim into gold. It was like in $1.5 billion claim into gold. And after this tender, it was presumed in the market, at least for some time, that gold is solvent. So you get on this huge senior secured claim on gold, which is secured by loyalty program of gold, the Smiles program, which theoretically has some value in billions of dollars. So Abra was kind of part of gold complex. It was always like, even on, if you get on runs on Bloomberg, it was like gold bonds and Abra bonds together, right? That's how they were thought about. But then things deteriorated with gold, and in Brazil, I think LATAM Airlines did pretty well after its own restructuring. I think this is like the best airline in Latin America by a huge margin, so it took a lot of market share. Then Azul has been developing another airline in Brazil quite fast. So gold was under tremendous pressure. Its margins deteriorated. Liquidity. Big problem was still liquidity. So they did the tender. So they got rid of a lot of debt, but liquidity was still an issue with gold. And what gold found towards, I guess, end of 2023, beginning of 24, is they are short on liquidity, and they also have some delays on aircraft delivery. Some aircraft they couldn't do maintenance on, so they got some aircrafts that were just sitting on the ground, not flying. This kind of exacerbated the problem. And beginning 24, Gold filed for bankruptcy, which was obviously not something that was expected when originally this Abra deal was set up. So after that, there was this process with bankruptcy of Gold, which lasted about 18 months. Gold exited bankruptcy in middle of 2025, this year. And as a result of this bankruptcy, what you allude to, Abra received 80% stake in New Gold post bankruptcy, which it currently owns, and it also received second lien bonds, exit bonds post bankruptcy in exchange of their previous claim. So they received 850 million of bonds. These bonds now trade in the market around 60 to 70 cents on the dollar. So that's what Abra has on the gold side of equation, right? That's where it stands right now. On the other hand, what interesting that has been developing over the last couple of years is, and even before that, Avianca has really been just quarter after quarter posting great numbers. Every quarter has been improvement of EBITDA, and as I said, they used bankruptcy process in a maximum possible way, very efficiently, very good operators, and they're number one market share in Colombia by a huge margin. Bogota is actually the biggest, interestingly, hub in Latin America by amount of passengers. So they have been really leveraging this recovery. The EBITDA is right now significantly higher than it was before COVID. The EBITDA margins around 25, 27 on the same level as LATAM Airline Group, which, as I said, is considered by pretty much everybody the top operator in the space. So Avianca really performed very well. And this stake of Avianca, by virtue of this performance, its fair value, in any way you would estimate it, it just kept growing and growing and growing every quarter, because every quarter Avianca had deleveraging, so they decreased their debt position. For example, over the last 12 months, leverage went down from, I think, 3.3 times to 2.8 times of EBITDA. And as obviously, if there's any enterprise value to Avianca, now you subtract a smaller amount of debt from it to receive new equity value. The deleveraging, obviously, it builds significant equity value here. Over the last 18 months, what happened is Abra turned from gold play in much more an Avianca play. And what needs to be also said, what happened a year ago with Abra bonds is they made a refinancing of these bonds. Why they did it is because these bonds are secured by collateral. Collateral is 100% shares in Avianca and various interests in GOL airlines, equity interests, as well as this loan into GOL. And as with many bonds, you have this loan to secured bonds. I mean, you have this loan to value coverage test. And because GOL went into Brexit, the old bonds weren't breaching certain covenants. So in order uh, for Abra to cure the default and effectively also for Gold to exit the bankruptcy, they needed to do a refinancing of these bonds, which they did almost exactly 1 year ago in October 2024. And that's when these new 5-year bonds were issued. As I said, they're 14% coupon, but it's 6% cash coupon and 8% PIK. So PIK meaning like on every 6 months you get in a partial capitalization of these bonds, so you get an issued new bonds to your added to your current position.
Now,
So
now on this, I was looking through the prospectus, and it seems that the 6%, there's certain criteria where the 6% can actually fluctuate.
mhm.
And then, the company could actually pay more than 6%. And in that case, the total coupon drops to 13%. But then if they pay a little less
Yeah,
cash, then the coupon can go to 16%.
yeah, there is this deviation. In reality, it's pretty unlikely they will pay 6% because if you calculate now, they have this, as I mentioned, they received this second lien bonds in goal after the bankruptcy, which is 850 million bonds. It's 9.5% coupon bonds. So if you multiply 850 by 9.5%, that's almost exactly how much cash flow you need to pay 6% coupon. So they will have for the next few years, from this gold bond alone, they will have enough cash flow to pay 6% coupon, and it's not optional. Like if they do get actual net income from their portfolio investments, and one of the investments is gold bond, then they will pay 6% coupon. So it will just be like that. So it will be. I think in reality there is this variation. I think in reality it's just gonna stay like this. I think it's like we can look at those details. Then if let's say if it goes if instead 6% cash, 8% peak, so 14% total, you get in 13% cash. That's almost the same, right? Because instead of getting some part in bond form, which trades at some discount to par, you get in everything in cash. It's more or less the same. That's just
Yeah.
that's not a huge difference.
No, it's just because it's not typical. Now,
Yeah, yes, it's a
now,
quite unusual one. Yeah.
and then it was, I was thinking about gold, and I'm thinking, even though gold came out of the, they did a restructuring, it still seems pretty highly leveraged, and it seems like they might still, struggle, just by looking at what kind of interest payments and amortizations and capex and lease payments. It seems that, if they stumble at all, they have like zero room to budge. It just from my ballpark calculations. I don't know. How do you what do you think about?
No, I think you're right. I think if you look at the projections, they're a bit like hockey stick in terms of EBITDA. I don't know if you look at the projections post exit, like this next 3-4 years, there's a ramp up in EBITDA, so they have to deliver on that. The positive thing on it, they do have some tailwinds in that, as I mentioned, a lot of aircrafts have been grounded, so they've been just waiting for this maintenance to be done, right? So I think 20% fleet will just get back flying, right? So that's your tailwind, where this aircraft just gonna go back to the market. But otherwise, yes, I think this is a risky business plan. This is a growth business plan. You have LATAM Airline Group, which is a significant, strong competitor. Azul is now in bankruptcy. It's going to come out stronger. It's this three players market in Brazil where each airlines has about 30%. That's a tough market. Gol has good slots in Sao Paulo, Rio de Janeiro flight. Gol in general only flies domestic, right? So it's purely domestic, whilst, for example, Azul flies a lot of international flights. So even though they are like the 30, 30, 30, there's certain niches where these airlines dominate. And that's why actually there was a talk about Gol and Azul merger, where you would think like, how could those two merge if each one is 30%? It would be still 60% together. But it was possible. Now it's not been discussed because one is exited bankruptcy and other just entered the bankruptcy, so you cannot even exchange shares. But it was possible on, interestingly enough, on the antitrust basis, because they're flying different destinations, right? So actually, they're 30%, 30%, but Azul flies international, whilst Gol goes domestic and on different segments. So it wasn't like totally impossible. So what I'm saying is that Gol has some niche where it plays, right? So, and it has some pricing power there. But yes, you're right. So first lien bonds that they issued, I think it's 15% coupon, first lien exit financing. So it's really high. What needs to be said from the point of view of Abra is we look at this second lien bonds, which trade 60 to 70 cents, which shows you that market is hesitant to the idea that Gol is definitely out of the woods. But what Gol has is around 1 billion of liquidity right now. So what we care about, we're going to get 9.5% coupon for the next 2-3 years, I'd say, right? You would think, right? And that's already around 30 cents potentially. And
But
and then they have a residual.
they have the option to pick it. So if Goal has any problems, my understanding is they don't have to pay the 9.5%. They can just do paid in kind.
Is it no? But I think it's in the decision of. But that's Goal, meaning like Abra is 80% shareholder. They're the ones going to call the shots on it, right?
Yeah. Okay. So
As long as they have cash, they will pay themselves.
yeah, yeah. I see what you're saying, because I was like trying to look at the numbers. It seems that there's like 2 billion, which is like 13-14%
Yeah.
interest. So that's like 300 million right there.
Yeah.
And then you're talking about the Abra stuff, which is like another like 80 million. And then there's an amortization on the take back notes. So that's another 25 million. So now you got like $400 million.
Mm-hmm.
And then you also have some lease payments. Like if I looked at the second quarter accounts, it seemed that because they had in the second quarter accounts lease payments for the next 6 months and then the next 6 months after that, and it was something like 1.4 billion Brazilian reals. And I was like, if you add the leases and then the $300 million and then another 100
It's,
million, it roughly comes out to, and then you add some capex, right? It
yeah.
seems that it roughly comes out almost exactly to where the EBITDA is. Like I didn't even realize, because I was
So
adding it
that,
up.
yeah. That's right. Yeah, I noticed that one as well.
Okay.
Maybe that's how they devise the business plan. Maybe an easy way to
Yeah.
project EBITDA.
Yeah. So I guess here, like from a risk perspective, because I'm always thinking like, okay, how can I lose money? And the one thing
Uh-huh.
is, I was like, okay, I don't care about goal, because goal is
Yeah,
like, it's already in the loan to value calculation, the equity is zero. And the only where it affects it is the interest payments, where we want the 80 million to come in order to pay for the cash. And the
yeah,
other part is that it affects the loan to value, because it's like they release the loan to value every quarter, and I saw it was like 67%. But then if gold goes bankrupt again, then I'm thinking, okay, then the gold debt is worthless. So then the LTV
yeah,
drop goes up to 84%, which is still okay. I'm just thinking about what's the worst case
yeah.
scenario here.
But I think the way I would think about it is like right now, if you take so Abra is Avianca plus Gol, right? Right now,
Yeah.
the split of value between Avianca and Gol is maybe like, depending on what numbers you put on, it's 80% Avianca, could be 85% Avianca. So that's your biggest recovery comes there from Avianca. So
Yep.
in distressed, what we like to do is, as you say, just look at the sort of recovery value, what our assets are worth divided by your liabilities. That's how you get to your sort of downside scenario. If, let's say, for some reason they decide not to pay and you just get this collateral, right? And then you need to value this collateral and understand what you're going to do with it.
Yeah, so it seems even if Goal has problems, it seems that we're okay as long as Avianca continues to deliver. I don't know. Have you looked at all at what sort of cash outflows Avianca has going forward? I mean, at the operating company, because if they need to pay that before
Yeah,
we have value being at the holding company.
sure. So I think you have Avianca, you get into 1.5 to 1.6 billion EBITDA right now. That's your inflow, right? On the outflow, you have, I think, around 300 to 400 on capex, then around 600 on rental payment, and like 200, I think, on interest, stuff like that. So that's adds up to how much is that? Is that 1.1? And this so presumably then it generates around 400 to 500 million free cash flow. And this is sort of confirmed by what I mentioned in the beginning of the podcast, where Avianca has delivered actually from 3.3 to 2.8 times over the last 12 months. That's sort of what happened, right? So that's how this free cash flow got delivered to Avianca balance sheet effectively, and that resulted into this deleveraging. And that's expected to continue. I think they're pretty confident on the last call. The next results are coming up, but they're pretty confident they're getting to 0.5 times leverage around plus minus by end of the year. So maybe just talking a bit more about the numbers with respect to Avianca. So Avianca is 1.5 billion EBITDA right now. It will be most certainly around 1.6 by end of the year, because one of the things they did end of the year last year, they bought Vamos Air, for example. They did the acquisition, which generates in itself around whatever 70-80 million EBITDA. So it was obviously not in the LTM number, right? So you add 50 million already there, plus there are some improvements continuing. So I think you get, but even let's say with 1.5 billion, let's stay with 1.5 billion numbers to make it simple. Then in terms of multiples, in general, airlines trade whatever 4.5 times to 5 times.
Yep.
So if you say your leverage is 2.5 times, that means on the low side, you get in 0.5 minus 2.5, you get in 2x for your equity value. So 2x times 1.5 is obviously 3 billion, and the total debt of Abra is 1.9, right? So this means just under this simple calculation, you get 150 cents recovery from Avianca staying. Then obviously you can put additional haircuts there and make it more like you can do like 4 times.
Yep.
Even if you do 4 times EBITDA, that means like you got 1.5 times remaining for equity. This is still 1.5 times 1.5, 2.3 billion. If you follow
Yep.
my numbers right, you still exceeds the value of Abra debt, right? So that's kind of where things stand.
Yeah, and
With
just for
Avianca.
listeners who have no idea, like the total Abra debt is around 1.9 billion, because they also have some term loans. They also have a little bit of other debt, and from what I understand, the entire 1.9 billion has the security of Avianca.
Yes.
So that's why Oleg just said, even with the 1.5 times, you're like 2.25, and that's still more than the 1.9. So we want Avianca, looks like they're doing well. Could something impact Avianca? Not really from the operations, but something outside of their control. I don't know if you have any thoughts, of right, over the last week, we've had this discussion, Trump accusing the Colombia and they're not going to give them payments or whatever.
Can't really comment on Trump too much. But
The-
what I should say, it's still it's business, right? I mean, this is airline. It's between 40 and 50% market share in Colombia. Like this is a huge hub in Latin America. Like these planes still need to fly. The downside, what happened, by the way, we should maybe go back a bit. Why Abra bonds sold off? Because right now they're 97, but there was a period of time beginning of the year where they were like in the 70s even.
oh,
um,
wow.
75, 80 they were, yeah. It was basically due to Trump, right? This Liberation Day. And because what happened then, as you recall, obviously, there was, and all our listeners, there was a huge uncertainty in the market. Some people were saying they're going to be empty Target shelves in next week, stuff like that. And then in airlines in America, all airlines withdrew the guidance for the year, and some of them said, like, we're gonna see the CEOs of these airlines. This is like the worst market for airlines we have seen in years. And there was also, I think, effect from Dodge because I think some government people stopped flying because they weren't allowed to. So there was like a few things going on in U.S. market in particular. But anyway, this led to a huge sell-off in airline stocks in America, and airline stocks in general are susceptible to the to recession fears, right? Obviously, it's a very cyclical industry. Interestingly enough, and this took together all of airline stocks globally, right? In Latin America, inclusive of Latin America, even though in Latin America, actually, they didn't have negative performance this quarter. Even in Brazil, even things went fine. Like LATAM, if you look at the results, was great. So that's kind of the market risk that led to people to ask for higher risk premium on all airlines bonds, because people like, oh, tomorrow is recession, sell airlines. That's like a knee-jerk reaction you get, right? And that's a risk but it is mitigated by the fact that there are different airlines, right? This airline is a very strong position. I think uh, it showed that through the cycles, it emerges stronger after COVID. They had a couple of competitors in Colombia. They no longer exist, right? That's what happened, right? And right now, EBITDA of Avianca is 2 times higher than it was in 2019, right? That's just they experienced the crisis. That's how they deal with crisis.
Yeah. So for those people listening, when Oleg refers to LATAM, he's talking. There's a company called LATAM Airlines.
Yeah, sorry, yeah.
Yeah. Yeah. No, that's
Might
fine.
sound confusing. Yeah, yeah.
Yeah, it might
It's a
sound
dominant
because people.
airline in Chile, Peru, Brazil. It's the biggest market player there.
So because Trump is all going about the drug trade, blah blah blah, but hasn't Colombia actually improved a lot over the last decade with regards to that area?
To drugs, you mean, or to?
Yeah, yeah.
Yeah, I would think so. Yeah, but then to me, it's again, it's a bit of a sideshow, right? It's just I think it's going to be resolved one way or another. You're not going to shut down Colombia altogether from world economy. Like I don't think that's what's going to happen, right? Um, Plus, there's going to be election in Colombia next year, so maybe that's the way to engage somebody to have his preferred candidate to be a new president. I don't know. Like this agenda is tough to 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 think about and understand. But what I can say is this: in emerging markets, these risks are quite often they are just overpriced. Even like election
Yeah,
risks, oftentimes you have socialists winning, and then they turned out to be doing something that people
it's
ask to
capitalist.
people is capitalist, exactly right. Like for
Yeah,
example, recently in Sri Lanka, the guys who won in Sri Lanka recently, it was surprise election, surprise win. They had like Marx, Engels, Lenin on the walls of the cabinet, right? And before that, just to give an example, like Sri Lanka had a uh, almost agreed the deal with on debt restructuring and with IMF. And then the moment these guys won, the bonds collapsed 10 points, but 2 months later they were like 10 or 15 points higher because these guys did whatever is needed, right? So all this political noise, sometimes it becomes serious, but most of this time is just you get an extra risk premium in the markets
Yeah.
that actually you just get paid for.
Yeah, it's like when Lula got elected in Brazil and the bonds collapsed, and then, they rallied when he
Yeah.
didn't do all the extreme
Yeah,
stuff.
yeah.
What is he? Because I like, again, Colombia's investment grade. I mean, is Moody's, S&P, Fitch, have they made any comments? What is your take on, the sovereign?
It has issues. Like this year, there have been some actually deficit came out of control a little bit, and the bonds traded off. Not much. I mean, it just so it's on the borderline of potentially if they have another 2, 3 bad years fiscally, it could become problematic, but not quite. It's
Okay.
not quite current situation right now. It's manageable, right? In any case, there is elections next year. There's going to be a new reset. Whatever we have to see. I'm not sure this going to have a significant impact on Avianca, right? Because we've seen that's if it if it if it becomes a significant impact on Avianca bonds, which by the way also trade in the market, or Abra, I think there's going to be an opportunity because oftentimes in emerging markets, actually, what happens there is a so-called sovereign ceiling when sovereign pressures the corporates, right? But oftentimes corporates have much better balance sheets, and that's actually an opportunity
Yep.
to buy those corporates, right? Because so you have fiscal deficit instead of 5%, instead of 4%, it is 5% this year. Why does it matter for Avianca? It doesn't. But bond market might say, okay, Colombia, we just sell Colombia. I remember in a similar situation, for example, in Greece, where Greece went in default, but Hellenic Telecom had very little debt, but still it was impacted by this Greece default, etc.
Yep.
Even though Deutsche Telekom owned Hellenic Telecom and it never defaulted and it never had to debt to EBITDA of 1 times, 1.5 times, so just nothing. So they could pay off this debt in 2 years. But still, market could, as you say, if something deteriorates, markets could have issues with this. But this is most likely going to be an opportunity, right, to either initiate
Yeah.
position at better levels or add to the position, right? Because I don't see it's directly affects finances of Avianca.
Yeah. So yeah, I'll just correct myself. Moody's has Baa, so investment grade. S&P and Fitch have it at BB plus, so it's in the high yield there. So this is why I wanted to mention Colombia, because it's
Sure.
obviously it's
No,
one of the
I
risks
think it's
there.
important. It's
So the other, before we mentioned about that weird range which could come to the coupon, of course the basic assumption is that you're going to get about 14%. The other thing which is kind of funny is the bonus equity. So
yeah, yeah, that's right.
on
That's pretty unusual.
yeah, it's pretty unusual because basically, for those listening, if it goes to maturity, you get a chunk of equity in addition to getting your principal and 14% coupon. But having that equity essentially incentivizes them to call the bonds as soon as possible.
Yeah, yeah, that's right. The first call price is actually next year, October 2026. It's 106, which seems high, but still, if you don't do that, you pay 14% for the next 3 years. So kind of your implied yield is maybe like 12, whatever it is. Yeah, 12% to maturity. If you think your bonds are money good, you probably could refinance it. Original Abra bonds that we issued in 2023 were issued at lower coupon. I think it was below 10%, if I remember correctly. So it's kind of doable in theory. Also, before October, starting October next year, this is when Abra. There is a weird formula, but basically starting from October next year, Abra bondholders
Yes.
will start to receive this equity, right? And then the longer
Yes.
they remain outstanding, the more equity. It's kind of like
There's a
it really
schedule.
sets up the incentives. Yeah, yeah.
Yeah, it's crazy. I've never seen anything like that. So it just goes, the longer the debt is there, the more equity the bondholders
Yeah,
get.
yeah.
So, so this is why I kind of think of this, to be honest, as a 1 year maturity rather than a 4 year maturity, because, if Trump gets angry at Colombia and, let's pending that doesn't happen and Colombia isn't sanctioned or I don't know what, and the airline is doing fine, then they'll probably try to take this out. And one way would be to refinance. And that could happen even with nothing, with, little improvement from here, just because if the Fed cuts interest rates just from there, they'll refinance lower. Or if they do an IPO, I think you mentioned this to me when we were chatting at the conference, that there was a potential IPO for Avianca.
For Abra. No, for I think for Avianca also, but for Abra maybe they're really trying to do it for Abra, right? I think, and we'll have to see, right? I think if you try to, if you assume, as you say, there is no crazy things happening, you could envision this deleveraging. It naturally will continue because leverage already right now is quite low. It was 2.8, maybe right now as we speak, it is already 2.6, right? Even if nothing happened, they don't improve any EBITDA, this deleveraging will continue. So this 2.6 will become 2.5, 2.4, maybe like in a year from now, it will be 2.2, right? EBITDA. And this means that the balance is going to be equity value. So it's going to be pretty evident that there is ample equity value for Avianca. And then on the basis of that, you could do Abra IPO. I think that what they are waiting for is to get better valuation, is to see if gold takes off, right? So if this business plan shows some improvement in the next 12 months, let's say, if there was this low-hanging fruit that they will be able uh, to get, and then maybe the second lien bonds, maybe they trade higher than 60 cents now. This would give them high valuation, obviously, on IPO. And then the market will also be like forward looking on gold, like, oh, it's improving, so it's a growing story. This might be like something suddenly worth something. This option, I agree with you. I wouldn't put high value on this option, but in their minds, because they're equity investors anyway, in their minds, this option is worth something, right? And then they may be waiting a bit to see if it's
Yeah.
realized before they pull the trigger on the IPO.
Yeah, because of gold, I think Abra would be a difficult IPO. Probably Avianca is an easier story.
Yeah,
So,
yeah, it's definitely cleaner.
do you have any thoughts on management? Because the people behind these things, can be important.
Well, I did some background check some time ago. Experts, spoke with few experts here and there. I think they're good, and in a way, on management, I'm sort of outsourcing this to Elliot because Elliot put this management. I wouldn't second guess them, right? So should be fine. I think they have access
Okay.
to the top people, and they showed like the number speaks for them.
Is there any? Do you think is there anywhere here where there's any misaligned incentives? So, is there anywhere where someone screws someone, and I don't know? Do you think everyone's incentives here are aligned?
Well, I think the way I see they're not aligned is they probably might want to try to hold out longer to see if this goal plays out, right? So they may be still hopeful on goal, right? Well, whilst I would pull the trigger. Of course, as a credit investor, I would prefer them. Why don't you sell Avianca stake today and get done with it, right? Under any scenario, you get par for these bonds right now, right? Or do it in a year's time, right? Or whatever. But they want, but they maybe want to take it longer, right? To build more value. And if you build more value, that's like it's a similar to hedge fund manager where he's just like he gets paid on profit and not on loss, right? You have leverage structure where it's just they want this business to grow, right? I'm as a credit investor, I really don't need it to grow. I'm fine already as it is, right? It's just enough for me. But I think they're not like doing something crazy in a way that they're not just throwing money to some strange ventures, etc. They're doing like relatively bread and butter stuff. So it's not something I'm concerned about.
I mean, other high yield guys that you see and talk to, do they have a similar positive view, let's say, of these Abra bonds, or do they see different types of risk, or do they not like it because, I don't know, for whatever reason?
No, I think in general, I know other people, they invested in these bonds as well, right? So it's similar holders to me. I would say in general, this whole universe of LATAM airline bonds is just, it's not for everyone. There are some people who say airline, LATAM, we just don't even look at that, right? And what was also happening, important to mention, is as I mentioned, Gol filed for bankruptcy last year. When it files for bankruptcy, you need to raise deep financing. After deep financing, you need to raise exit financing. This was finally done in May, but before it was done, Azul filed for bankruptcy. So Azul needed to raise deep financing, big size as well in Brazil, another airline, and and um, and then it needed also to do the backstop for exit financing and for rights offering. So a huge amount of money had to be set aside for Gol and Azul structures. And so for people who have allocation to airlines, this consumed a lot of their capital, right? It just doesn't have a lot of buyers left for the Abra effectively, right? It crowds out Abra in a way, right? Because you need this money spread out somehow between all of them. So that's even for people who do look at LATAM airline, it becomes a too big of a piece when you have this Gol, Azul, and Abra, and you have a choice like what you're gonna do. Like you can do this and that and whatever, and all of them are like 15% yield or whatever. You can, so it's pretty high, but whatever. It's a lot of capital that you need to allocate in the space.
Yeah, I mean, they could be stuck in a certain zone where it's not, the yield isn't high enough for some, and then it's not low enough for some, you know?
Yeah, exactly. Yeah.
You got your distressed guys, it's like, 15% yield, I'm not interested.
Yeah, exactly.
And then you got your less risk averse guys who are like, what are you talking about? This is too risky.
Yeah, exactly.
You know, more like the people who'd be doing like the Hellenic Telecom sort of thing, you know, it's like, 1 times debt to EBITDA, and it's just, this is going to work out. So, I definitely understand where you're coming from. Oh, and for the listeners, when Oleg said deep, is debtor in possession. Just another acronym there.
Okay, yeah, sorry.
There. Because I'm sure, no, don't worry about it, Oleg. I'm just sure a lot of people listening might.
That's financing that you need to raise on day one of bankruptcy, where obviously you need money to pay your suppliers, etc., and it becomes super senior debt on the capital structure.
Yeah. So I just wanted to mention that, just so everyone can follow along here. No, I think we've covered. I think we've covered most of the points here. I think it's really interesting. But didn't it also recently dip to 90? I think didn't it just rallied over the last 2 months from 90 to 98?
Yeah, it did. When I presented at the conference, it was like high 80s. Now it's 97. So it did rally. So it's true, but still 15% yield for collateralized paper, depending on your risk appetite, something you could look at.
Were any of the investment banks pushing this, or was it just random chasing of yield by funds?
I guess, chasing for yield probably, yeah. People like suddenly starting to look at airlines. They had this trauma of Liberation Day when just we don't touch airlines, don't do anything with airlines. This trauma in the market, it always gets healed sometime, right? So people start looking back into this. In particular, where, let's say, in Gol, to what you say, for Gol, it's difficult story. Right? Gol, first lien, it traded in high 90s. Second lien, it didn't quite rally. So it was selective, right? So Gol, second lien bonds, they didn't go up, right? This bond went up because I think people understand that you have Avianca story here, which is much more safe story to be involved in than.
What are those trading at, the Avianca bonds?
Oh, Avianca bonds, they trade, I think 8-9%, around 9% yield, 8-9% yield.
Okay, so maybe so maybe people are just preferring that rather than to be subordinated.
Maybe you could look at that. That's quite liquid bond. It trades like 1 point bid ask in the market. So
No, 9%. I think a lot of people would be happy with that. I mean, if at the end of the day, if you think about it, what are long-term equity returns, right? Is like 9%. So if you get
yeah, that's true.
9%
Yeah,
at something, that's
at
two
that
point,
on the operating company. Yeah.
2.8 times whatever debt to EBITDA you're at the operating level, and
And
it
it's
seems everyone
decreasing.
there. Yeah. No, it makes complete sense. Well, you know, yeah, unless you have something else to add. Oh, by the way, Oleg is I think it's almost 11 o'clock. He's in Uzbekistan right now, so at an event there. I am jealous because I've heard there's some opportunities there. So hopefully, when he comes back, we can comes back to Cyprus, because he also lives in Cyprus.
We'll be happy to.
We'll have a coffee, and you can tell me about your adventures in Uzbekistan. So, is there anything else you'd like to add, or are we just going to? I'll let you go. Well,
No,
we'll
I
let you
think
go to bed.
no, I think no. I think we covered everything. Thanks a lot for your questions. They were really very good and covered pretty much the whole spectrum of things I could theoretically talk about. So that's very good questions. Thank you.
Okay. Well, thanks. I actually spent 2 days on this trying to understand what
Okay,
was going on.
right. No, yeah, it feels like you really did quite a lot of work on it actually. So
Well, Well, you also told me the IR website. So those who are listening, there is an IR website for Abra, for like Goal, for like Avianca, and there's actually quite a lot of data and info and presentations there
yeah,
for people who want to dig in deeper there. So check those out. I'm going to actually probably post those the links to those websites in the notes to this podcast, so people could just look them up there. So other than that, I want to thank you so much. This has been a really, really fantastic session. I really enjoyed this.
yeah. Thank you, Sophocles. Likewise. Thank you for your time and for your invitation.
And for those of you listening, this was one of the ideas presented at the Cyprus event in September. Our next in-person event will be in Vietnam in March. There was a lot of the event is Asia focused there, with a lot of local people from the region there. If you can't make it out to Vietnam and would like to hear more great ideas, then you can check out the online event I'm putting together in December, and I'll put links of those in the notes, or you can just go to FatAlphaValue.com. So thank you very much, and we'll have another podcast next month with another great idea.
Thank you.
Thanks. The podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.